What did you do with your dollars 6 weeks ago? If you put them in US stocks, you'd have made 4%. If you put them in gold, you'd have lost almost 3%. But if at the height of the supposed European sovereign debt crisis you had put your money into euros, well, then you'd be sitting on a profit of almost 9% now. The euro soared to a 2-month high against the dollar on Thursday as investors became less concerned about Europe's sovereign debt crisis, more worried about the US economic recovery, while the currency has been on a steady march since hitting a 4-year low in early June. Well, we are going to bring you both sides of the argument on the euro now. With me is Simon Derrick, Chief Currency Strategist at the Bank of New York Mellon, who predicts that the euro will weaken but that it will survive, and Stephen Gallo, Head of Analysis at Schneider Foreign Exchange, who says that the euro is more than just a unit of exchange in a social tool fostering an attitude of adaptation and change. Is that really what you said, Steve?
That's right.
Very good.
That's right.
Now tell me, I mean, it does seem that you are, at the moment, making the right call. You think that the euro, you've said to me this for a while, that you think the euro should be around about what?
Fair value, 130 to 135, yeah. We didn't get into the parity camp. And it's not because the euro is out of the woods and there will not be more strains. There's certainly more time for European policymakers to screw things up again and get the markets very scared. That could easily happen. But I think the downturn, well, I should say the about-face in U.S. economic data is very important for a dollar bear like me, because it signals, and I think now it signals to the market, that we're sort of on a very level playing field here when it comes to growth. And you really are not in a position to trade the dollar higher because of relative growth differentials. And so really a lot of this about face and euro dollar has been a lot of just dollar negativity getting flushed back into the system, rather than everyone saying, well, it's all good for the euro now.
Simon, you would agree that actually it's the dollar that's doing badly rather than the euro that's doing well, I guess.
Absolutely right. I mean, I think that everything we've seen over the last 6 weeks has been about dollar negativity and about a sharp slowdown in the second half of this year. I mean, let's have a look at the moves in the last 48 hours, very much triggered by these very dour minutes coming out from the FOMC. I think if we look at Europe, I still don't see anything that's coming out that's overly positive. Yes,
what about those predictions for dollar-euro parity? What do they look like now?
I don't think they're looking that great at the moment. I will say that. But I think if we look at the euro in isolation, I don't see anything there that suggests to me that it's going to regain the kind of confidence that it held through the course of the last decade.
It's not the Deutschmark, right?
Yeah, exactly. It is the combination of all the different elements. It's just as much about Greece and Portugal and Spain as it is about Germany. And I think that sovereign investors, who've been a prime driving force behind the strength of the euro over the course of the last decade, and I'm thinking of the China's et al. Of this world, will be rather more cautious about diving in as aggressively as they have been. One other thing, I think that also an important point here is that the pace of reserve growth, the thing that's driven reserve diversification, is slowing down very dramatically this year as well.
You take this point?
I think slightly. It is possible, and I think certainly for the short term, big sovereign reserve managers like in Beijing will be cautious in terms of how much they pile into to the euro. But, you know, it is the biggest, most liquid alternative to the dollar. It holds the key to the whole dollar diversification trade, and that is an ongoing thing. It's not going to stop. It's going to continue in 2011, in 2012, and 2013. And the euro does hold the key. And we've seen comments from Wen overnight, China's premier. They're not giving up on this thing. They still believe that it is a viable investment alternative to the dollar. So cautious in the short term, but I think 2011, I think the euro might do very well because the dollar looks shaky. It looks very fragile.
Would you then? Would you actually turn around and say, "Okay, look, we've got it wrong, and we don't think it should be down to"?
I might be forced into that position very soon, Andrea. I mean, we certainly felt there was going to be a correction back to 127, and the fact that we're beyond there is very clearly making us change our views. I don't have a problem with changing our targets to where euro-dollar could go, but as I said, I think that this is about the dollar, not about the euro. Unfortunately, it paints a very negative picture for the world going forward, because
it's almost which currency do you hate least?
They all look bad. It's an ugly
somebody
contest.
described it as being, you know, which is the best horse in the glue factory at the moment. And frankly, you know, the dollar and the euro sterling are all equally got an issue. And I think that the real answer is you've got to either start looking outside the currency markets. You've got to, you know, in the long run, you've got to look to the commodity world, Or you've got to take the view that the people like China are ultimately going to throw in the towel and say we don't like owning any of this stuff, and perhaps the smartest thing to do is stop accumulating reserves in the first place.
Do you think that's likely?
I think they will do that, and I think but we've been through so much with the euro in 2010, and you can see that you're absolutely right to point out what a lot of these banks have done. They've chased the market with their forecasts, and now they've got a big problem on their hands because if people who sold euros in the 125 to 127 range start to get out of the market, you ain't going to see parity. It's going to make them look very bad. But I think as far as the dollar is concerned, I think we will continue to see those dollar sales. And I think the reserve, because the reserve currency system that we are with today, that we've been left with today, is so heavily weighted towards dollars. The euro can only benefit as time goes on, because that's the big shift out of dollars and into other alternatives.
Okay, guys, we could talk a lot longer, but I'm afraid we've got to leave it there. Stephen Gallo, Simon Derrick, thank you very much indeed.